Hi, everyone. It's Thursday, May 30th, 2024. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and today we'll be chatting through a few raises, rounds, and news that happened over the past week. And as usual, to help break it down, Alex Norman is here. How are you, Alex?
Great. How are you?
I'm great. It's been a while since we've recorded together, so it's nice to see you.
Yeah, I'd love to say it's the great weather keeping me up, but I've just been on the road, so
Mhm.
zones and bad Wi-Fi have not helped us get together.
Yeah, you've truly been like end to end of the world in the last like month or so. So it's good to have you back. We obviously kind of went through what was really relevant from the last like week or so, what we wanted to talk about. So there's a few things we've noted that we're gonna chat through today. So first up, Relay crossing the finish line with a 32.2 million USD Series B. So before we kind of get into the logistics of, Relay, what they do and how they were able to raise, just share a little bit more about what the news is there.
And for some feedback, I would think Relay, the founders of the Relay, and most founders would say they're not cross the finish line. It's just they're still just a bit further from the start line. Look,
It
Relay.
was meant to be because it's Relay. It's supposed
I
to
get
be
it.
line.
Just in case Joseph is listening, don't want him to think the company's nearly completely. I think he has a lot more to grow, and we'll get into
That's a fair clarification. Thank you.
yeah. So Relay is a Toronto-based fintech. In particular, a neobank focused on SMBs. They
Mhm.
secured a B round of 32.2 million USD, led by the previous investor Bain Capital Ventures,
Mhm.
um, and participated with a bunch of other investors. The money is going to be used to grow and fuel, basically grow the company with more products and get more customers.
Okay, and you just kind of mentioned like, SMB and neobank. So why? So I guess what differentiates Relay amongst like the competition and the other neobanks?
Well, so some of the advice we get as founders and startups is tackle a problem you know. So
Hmm.
there's quite a few neobanks that probably founders know, especially because unless any small business or financial one is right now basically targeting the US due to the lack of open banking in Canada. We can get into that later day. But so Relay focuses on serving SMBs, in the States. And if you were to ask most founders, probably the first thing that comes to mind is, oh, there's Mercury does this, or one or two other neobanks in the States. But most of what looks like competitors are either helping startups, that's Mercury, um, tackle their SMB, their banking needs, or helping individual like contractors. What Relay's done and differentiates them is built a product for the traditional SMB. This is like 2 employees to, I don't know, 50. Someone that's doing anywhere between 20,000 and 200,000 a month in revenue. And so they've built for a part of the US industry that's like, I think, 30 million SMBs, and they've built the product for them, right? So what differentiates them is when they went into the market, they said, hey, most of these SMBs only have 27 days of cash on hand. They don't really understand the cash flow. So let's build a product that provides their banking needs and helps them better understand and manage their cash flow. So
Hmm.
it's allowed them to focus on a subset of the market where they can be best in class and win.
Right. And I mean, aside from what differentiates them, how does Relay themselves make money?
Well, so most people don't understand how banks make money, and Relay has a few different levers that they
Right.
use. First, they take a spread on the interest they make on the deposits and what they pay. Second, um, you know, they also get money from card interchange. So that means if you're using them, like if you're a small business using the credit card they provide you, every time you swipe it, Relay gets some money back from the merchant that you purchase from. And finally, they have a premium service which adds features like same day payments,
Okay.
and they charge $30 a month for that premium account. So they've got a diversified revenue stream. You know,
Okay.
interest, interest, credit card fees, and a small. I imagine it's a small portion of customers paying a monthly SaaS fee base.
Okay. Yeah. Interesting. Thank you. That's very good. So as you and I know, we kind of talk about this all the time and how we've been just really struggling lately, I think, to find just pieces of news that we think would have just really great takeaways for those that are listening. We just haven't seen a lot of, rounds and raises coming together right now. So obviously this is a great one to be talking about, but why, just given just the lack of news and why we haven't seen it, why were they able to raise, or is it just even maybe people aren't announcing things right now?
Well, I do think the level of activity is lower than anticipated.
Mm-hmm.
I also think a lot of news is not being announced.
Okay.
So again, even with this relay, I don't know if this was completed last week or a month ago or 3 months ago, because there's no rule that says a company has to announce any news on any specific day. But I assume this was because I think Relay's been making announcements. So like, well, why were these? So that's the first question. Is there less activity? And I think less percent of the activity is being announced is being announced. Being done is being announced. I think the second thing here is, why was Relay able to get a large round? You can go back and say this is, the founder Joseph has been on a journey here. Like this is not something he created 12 months ago and has had success. He's been around fintech for a while. Like in 2012, I think it was 2012, he started Vuru, a stock market research app. He sold that to Wave, and progressed his career, and eventually he saw the opportunity, for let's call it business banking and money management. And they launched, I think, Relay in 2018. So this is now, what's that, 6 years into the business. And they built a robust product for a very specific customer that seems to be succeeding, right? Like, what to raise a B round, you need to be working now. So like, I think I read somewhere that they expect to be at 100 million run rate by end of second half of 2025.
Yeah.
The revenues rose 3x in 22, or close to 6x in 23, and they have 100,000 businesses. So this is an investment to put more fuel in a fire that's burning the correct way. I don't know what the unit economics are, but something must be going right when you have to be capital efficient and you're growing. So 3x, then 6x. So they've grown 18x since 21 and got 100,000 business. That's how you raise money in this market.
Okay. And do you think that this is an indicator of just what the future looks like for maybe other announcements coming from just like the fintech sector in general? Because I know that, like, startups aside, that has been particularly quiet. So do you see more rounds in fintech coming together?
Again, I think there's two different things. There's more, hey, early pre-seed and seed rounds, and that indicates where there is activity in new companies. I think fintech's going to be at a relatively lower level than it has been, 3-4 years ago. And it's at a lower level now. I think it'll stay there.
Okay.
I don't know. It really depends on who's succeeding. I think what's bigger indicator, if you look at through the announcements related to this, Relay is going from 140 to 200 people, so they're hiring 60 people. And that's great growth.
Yes.
Market in the workforce, if we've met the team before, they're all very excited, they're very happy to be there to recruit. I think what's different here than you would have seen in 21 is they're probably going from 140 to 300. So what you're seeing is company that's working, has shown it can grow, it's getting more fuel to put on the fire, and they're still doing it in a way that's looks relatively capital efficient to continue growing. And I think that's the more reality for these late stages. Can I predict who the next B round in fintech or insurtech in Canada is? No, because I don't know all the finances and who's out there raising.
You can't tell the future, I guess.
Yeah, like I do think we have a lot of companies that are scaling, and I think it's a matter of time, but we'll see.
Yeah. And it's nice to, again, we've talked incessantly about the layoffs and stuff. So it's nice they're going the opposite direction, right? As you said, they're growing. They've hired a lot more people. So that's awesome. And just lastly, obviously we did cover like a lot of the differentiators of this round and also Relay itself, but is there any other takeaways for founders or anyone listening?
Well, I think let's just talk about the overall state of the market. I think there is quite a bit of activity in pre-seed and seed.
Yep.
Maybe it's subdued from the, we would talk about 21 and then, kind of sick about telling that story. I think what's here is we're starting to see a trickle of announcement of later stage, but what we're seeing consistently is this is more traditional where later stages we call growth stage. And what that meant was that, hey, we have something where business is working and we can take more capital and efficiently deploy it to either grow the product, grow new customers. And I think this round reflects what we'll see going forward. There's a gap from starting a company to raising a large round. And I think the large rounds that we see now will have companies that have real business models, with one exception right now, AI-based like foundational models or maybe some co-pilots where there's a lot of compute and a lot of buzz. But what we've seen is there's now a functioning market, and the real, and this feels more realistic than what we were seeing 3-4 years ago. To get a $30 million round, a $40 million round, you have to have a business that makes sense, and people are betting, or betting is not the right word, investing in your ability to multiply that significantly so they can get a return. So I think the type of companies we see are going to have much stronger metrics, be much more, they're sustainable, and the money is being used to fuel growth, not to find a product or market that works. Again, except AI.
Okay. So yeah, the growth has to be there is just what I'm getting from this. So I think good takeaways for anyone that's listening. So just to move things along, the next headline, it's interesting, and obviously I'm going to do my best to like properly kind of tee this up for you to go into more. But disclosing rejection, I'll get you to explain more kind of what we mean by this. But it's about obviously referring to Riot platforms and the news from them. So just high level, what's the news before we go further into it?
This looks like a failed takeover that's sort of going hostile.
Okay.
So we got Colorado-based Riot platforms proposed that they made a proposal to acquire Toronto-based Bit Farms for $950 million USD. And I think we'll get into that a bit more as you ask questions.
Yeah. So okay, so that's a perfect way to kind of just get into like my next few questions. So just could you explain what Bit Farm is, because I wasn't familiar.
So Bit Farm, first of all, one thing that's important to understand, they're publicly traded. So that's why this news comes out, because if it's private, you don't bother. This is basically appeal to shareholders. So Bit Farm is a publicly traded on the TSX Ventures, I believe. They are a Bitcoin mining company, and they also provide compute power to other Bitcoin miners. And Riot Platforms is another Bitcoin miner, well capitalized. Bit Farms has had a bit of a problem with, or has had an interesting few months with their former CEO, who's left, what looked like in good terms, and ended up suing the Bit Farms, and it's now like they're both suing each other. Meanwhile, Riot Platforms have tried to acquire Bit Farms, and Bit Farms rejected them. So it looks like there's a messy transition going on.
Okay.
And Riot's using this to probably scare shareholders into taking action to go with them. And Bit Farms looks like a bit disorganized, and Riot Platforms is like, hey, we'll be the biggest Bitcoin miner, if we combine.
Right. I mean, you kind of did hit on a few points that were related to my next question, just about, I mean, obviously being a publicly traded company, like you do have to disclose things like this to investors and everything like that. But I guess like what would be the other goal in just like disclosing that, an offer was rejected, or that, nothing's going forward, just given, as you said, like how messy it is? I don't really know why you'd want to also like further disclose stuff like this.
This is not something we usually talk about in the community because we usually don't see it. So first of all, you don't see often two tech companies get into what's called a hostile takeover situation. And you definitely don't see one involving a Canadian startup. So like, let's go back to pure finance. So usually what happens between when a public company, most public companies aren't for sale unless they get the right price. Every once in a while, either private equity firm or another company comes and approaches company that get acquired, and there's some interest. And usually the preferred way to do it, if they believe that what they're buying is a team, and there's a lot of, if they believe that the company's being run well and there's synergies, they'll try to do a friendly acquisition. They'll go to the board, say, hey, your shares are trading at X. We'll pay Y. We believe you can get this for it. So it's better for all the shareholders. Lots of times when you approach, companies don't want to sell for whatever reason. And so that's the end of it. But, once in a while, company says, we really think this is strategically important to us. If you don't take our offer, we're going to go out publicly and try to get people to side with us and force you to sell. And so that seems to be what's going on here. So like there was, disclosed that the proposal was initially submitted on April 22nd, was rejected by Bit Farms. And so it looks like Riot says wants to buy this assets, doesn't really care about the team there, because you're going to burn if you're going public like this, you're going to basically piss off the whole management team, and you assume they're not coming with you and the board. And so it's interesting here. They not only went public with the offer, They also said, hey, we basically believe that Bitfarms is a bit of a shit show now, right? They said it's concerned over the recent actions of Bitfarms founder, as well as allegations made in a lawsuit filed by Bitfarms recently out us its CEO. So not only they said we made a good offer to you, but we said your company looks like it's poorly run. So they're trying to scare um, current investors or trying to get investors to back them. You know, well, I think, and let me see, I think they may have owned a certain percent. So there's, yeah, and Riot already said it accumulated 9.25%. So the play here is one of two things. They really want to get this transaction done and figure they can scare shareholders, saying, "Hey, we're gonna reward you for this, and if you don't do this, you're probably going to sideways because you're distracted. So we're a better person." Or maybe it's even simpler than that. They're like, "Okay, let's get the price up there and get someone to pay us a premium for the 9.25%, make quick money." I don't know which one it is. I assume they want to acquire the company, and they're just going to be. They don't care about keeping the current management team or board happy.
Right. Okay. So just a couple things from what you just said. So obviously we do not see this very often, and we don't talk about this on this show at all because we don't see it often. But and you know the aspect of it's out now out there and it's a potential of burning bridges. Like, is something like this to the point where it's just unsalvageable? Like, is this just dead in the water, or is like could this potentially at some point be like, oh, there's there a workaround to make it come together?
Well, if this is a deal and transaction, like, is there a workaround with? Sometimes the deals have to go hostile and they get the shareholder support, and sometimes this forces the company they're trying to acquire to come back to the table and come back with a resolution. Sometimes to walk away. Sometimes this is, this was reported May 28th, so it's ongoing. We're not going to know how to. This might take a week. It might take 6 months. And nothing may happen. Again, you're asking to predict the future.
I always just think you know everything that's going to happen in the next 6 months to a year, but
I know that with some companies, not all companies.
Yeah. Okay. That's fair. Well, maybe we'll just have to circle back on just what we're seeing if we do see anything kind of crazy come out of this. Any just final takeaways, learnings, anything else that's just really interesting to you that others find interesting?
It's funny with the recent resurgence of crypto and Web3, we don't hear much about the Bitcoin farmers or Bitcoin farmers mining. A lot of those companies are public, and a lot of them are doing well right now. So it's interesting how quiet that sector how little news that sector's gotten compared to where they are right now. The roller coaster has gone on. So it'll be interesting to see what happens in the next little while.
Definitely interesting. As I said, we'll have to pay attention and see what comes out of this, and also just Bitcoin in general and crypto industry. So a few notable rounds to talk about for the next segment for our lightning rounds. And again, probably throw a few extra questions in there for you. So why don't we start with the recent news from Artemis? If you could just share just what that news is.
Artemis, which was raised a $2 million Canadian round, led by Raven Indigenous Capital Partners, and I probably mispronounced that, with support from Telegraph Hill Capital and Ripple Ventures.
And why is this round interesting to you?
Well, you see the support of the water ecosystem here. Like, I've met Artemis in the past. They went through Founder Fuel. They're getting funds from a Vancouver-based fund that was created to support Indigenous founders. And the ecosystem is working like it is, giving founders from diverse backgrounds ability to build some companies. And what they are building is they have a tools to help knowledge workers access data, but help companies better access data is about being data scientists. So crowded space, hard to raise money right now, and they basically raised 1.5 million USD because the ecosystem has been there to help set up to have funds that are trying to get more diverse background founders.
Interesting. And is there anything like a final takeaway just someone could learn from this round? I know you kind of mentioned just like based on the ecosystem and how this came together.
I think this is a story, like, I've met these founders in the past myself. These founders are very tenacious. They've been scrappy, and they've stayed in the game until they got enough validation to raise capital, which is pretty impressive.
Awesome. And so just moving along to our next raise we want to talk about. So Collab, they raised 28.6 million. So again, I'm kind of just teeing these up for you at basically what the news is, but if you want to go deeper, just like the news and just why it's interesting, we want to talk about it.
So I think there's a few reasons I'd point this company out, and I'll just spit them out. You can then ask questions for questions you have.
Sure.
This team is basically, first of all, it's where it's based and where it was founded, Newfoundland. It's interesting. There's not many companies that come out of Newfoundland.
Yeah. Yep.
But I find Atlantic Canada, when companies work, they scale quite nicely.
Okay.
Which is interesting. So here's a Newfoundland company. They went through YC, to get initial traction and excitement. But I think the other thing that's interesting, they're helping automate, mechanical engineering collaboration. And it's been built by focusing on collaborative software. They've got, Fortune 500 companies. What they let do is let engineers review design files, capture and track feedback, and document issues from a single dashboard. So they took something that was very, one point was by paper, next point was probably by email, and they brought it together to collaborate. And this is a company that is doing stuff that you would naturally think, hey, this should be using the latest generative AI or feature LLM, lots of AI talk, but they've gone there without doing AI, and they help people design 3D models and engineering drawings, and it's basically still cloud-based. So I think they're still early in the game. There's a lot more they can build in to help their customers be more efficient. And it's an area that's been sort of ignored. And my guess is this is being used to just basically scale up, and they've got lots of traction.
Cool. And just hitting on one point you mentioned, you said companies out of Atlantic Canada tend to scale just quite nicely. Why in particular are you highlighting that they scale nicely? Is it just because there's not many that come out of there?
Well,
just curious.
So, and this is maybe a conversation over a couple beers or where we go longer and talk about this, but we talk about Canada as one ecosystem, and there's a lot of commonality across the ecosystem, but we are a bunch of different smaller ecosystems that have a unique ebbs and flows.
Yep.
I think Atlantic, and I think anywhere in this country, we have the potential to grow massive businesses. But I think due to local constraints or functioning, that we all have different natures. And I don't think Atlantic Canada produces, just doesn't have the population or maybe even experience to create a volume of startups. But it's a bit isolated, just geographically and capital wise. So there is a bit of capital start companies, but I think the ones that tend to scale have come out a bit more hardened and capital efficient and can scale faster, and are usually tackling areas which are not, which are a bit ignored. So there's less competition. So when they start, the flywheel starts, they can go faster. And again, I'm not saying there's many of them,
right?
But there's always a notable one or two. And again, it depends where you define a company. Like, because you could also, Spellbook is out of Atlantic Canada.
Yep.
It's co-founded, some founders are in Toronto.
Yeah, and there's been tons of recent announcements from them too. No, I was just curious as to why I think that point was mentioned. Anything interesting about collab in this round before I ask you about the last round?
Maybe for the community, you don't have to be using the latest. You don't have to be on the latest trend to help your customers.
Awesome.
This is still bringing cloud-based collaboration software to an industry which feels like we've been talking about for 10 years now. But remember, we live in the future. So when you ask me to predict the future, I can tell you what people will be doing technology-wise. I just don't know when they'll adopt it. And here's someone seeing an opportunity to take technology that's to an industry that's still working without it.
Perfect. Great takeaways. And so last one, Teal raised $8 million. Aside from just that obvious headline, what else is just particularly interesting about this one?
So this is experience, so high-level experienced founders. So what Teal does is they provide accounting solutions. They provide accounting solutions, and they don't service it on their site. They allow vertical SaaS companies to embed it there. So let's say you want someone to automate your bookkeeping. And one of the co-founders is a co-founder of Bench, which was doing this as a site, this destination site. So Bench is an accounting site or a bookkeeping site that takes care of it for you. And what this does is say, hey, we'll provide the services to your customers. So let's say you're a vertical SaaS company serving, waste disposal players, right? You're trying to provide an operating system for them now. You can offer them. It looks like you've now got to start first to take. We'll take care of your bookkeeping and accounting. So why is this interesting? First of all, this is sort of a recognition that there's so many services and websites out there. Well, most people don't want to be switching contexts and beyond. Like people have their 2 or 3 sites they want to spend most of their day. Now, the vertical SaaS businesses, historically, if you go back 20 years ago, people go, okay, we don't need a vertical SaaS for waste disposal industry, but these guys have slowly been building specific software for them, and lots of them been monetizing by payments. Hey, we'll we'll charge all your clients for you picking up their waste. I'm now stretching this analogy a bit far.
It's okay.
Well, the next destination is like, hey, we've now been collecting, we're doing a bunch of parts of your business. Why don't we do the bookkeeping for you and accounting? And that'll open additional financial service. So it makes customers more sticky, makes you more system of record, gives you another way to basically charge them for it. And it probably opens you to offering additional financial services. So all of a sudden, the ability to earn more money from your clients and offer a more robust product gets better as a vertical SaaS software. And then for Teal, they don't have to acquire the customers. They have to acquire you because they don't have to end customers. They go acquire these vertical SaaS players, and they can offer a service. They can build, and everyone gets economies of scale because they can service more end users and have more specific niche bookkeeping software.
Mm-hmm.
So I think this is a bet on further vertical SaaS, basically embedded accounting, which I haven't seen before.
Mm-hmm.
And I guess the other thing is the founder, one of the founders was the founder of Bench, which is interesting. And I also think this is an example of someone that raised money and it's 8 million, maybe in 1 or 2 rounds. And I think they've probably raised it as long as a year ago, the first bit of this without telling anyone.
You kind of took in again, very seamless way, just the next few questions that I had about, I want to know the relationship between, Bench and Teal and just the relevance there, which you did hit on, that it's the same co-founder. And then also just the benefits of embedding a service into someone else's site, just opening obviously for more, I guess, like financial opportunity and things like that. Aside from just everything mentioned, I know you speak about like founder tenacity and working really hard and grinding, building good relationships. Is there anything a founder could also take away from just what these founders have done? And especially if they're not a multi-time founder and hadn't found like a business before this?
People don't have to announce when they raise. So timing of a raise and an announcement as 2 separate things. I think this and Collab are both an example of where there's a lot of opportunity in stuff that are not the bright new shiny technology. Your fundamental thing you're trying to do as a startup is solve a problem. So let's we talked a bit about Collab. What's Teal trying to do? They're taking the idea of embedded software, which is now an old idea, targeting vertical SaaS companies, which again seems like a trend that's been playing forever, and found an opportunity. The problem they're trying to solve is twofold. One is for their customers that are vertical SaaS companies. Those companies want to have better retention, more revenue opportunity, and have their customers spend basically more retention and more revenue. So they're providing something they can embed relatively easy to offer more services to their customers and end customers, and to probably charge more for and capture a bigger share of wallet. And the ultimate problem they're solving is all these vertical SaaS companies, customers do need accounting and bookkeeping. And the idea here is it's probably going to be more seamless, faster, and cheaper. So again, we talk a lot about AI over the last 24 months. Maybe we talk a lot about crypto over the last few years. At the end of the day, the only thing that matters is solving your customers' problems.
Mm-hmm. I think that is a great takeaway. And there's obviously similarities in each of them, I think, just from probably all the headlines that we talked about. But I think there's some good like extra points to hit home about each one as well, because obviously each deal is unique to the company, the round, etc. So before we go, just a couple quick announcements about upcoming events. There's a lot, so I just kind of narrowed it down to just 4, like the upcoming 4 that we do have. So we have a marketing event on June 5th, so next week. That one is going to be very cool. It's a focus on like AI specific companies within marketing and just like that side of obviously how the marketing industry is evolving. June 17th is our big summer social. Obviously, tickets available on our website. We also have great group deals. So if you want to come out with your team, bring a bunch of you. Obviously, there's some great options for packages there for your teams to come out. TechTO Talent on June 24th. That one is virtual, so you can join from anywhere across Canada, find a job, learn from recruiters, any of your questions about just hiring and things like that. And then an e-commerce event with Orium on June 26th. So month of June is pretty packed. Did I miss anything, Alex, from your end that you want to mention?
No, I think there's a lot, and I think just we'd love to see you guys at the Summer Social.
Yes. Yeah. Please come out to Summer Social. We're manifesting just great weather, and it'll be a great time, great way to meet other people in the ecosystem and kick off Collision. Alex, I'll let you go. Thank you, as always, for helping us break it down.
Okay.
Really appreciate it. If you enjoyed today's episode, don't forget to like and subscribe wherever you are watching or listening, and we will be back in a few weeks with another installment of TechTO Quick Takes. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.